Bitcoin is not leading this market right now. The real leadership is narrowing into AI memory, Korean chips, and companies with earnings that can survive higher rates. Welcome to Dragon Bullion. Here is the market in one sentence. This is not a broad risk-on rally. This is a narrow earnings rally, and the strongest lane is AI infrastructure. That matters because high interest rates change what investors are willing to buy. When money is cheap, the market can pay for stories. When money is expensive, the market asks for current earnings, real demand, and pricing power. That is why Korean AI memory stocks are at the center of the screen. SK Hynix and Samsung Electronics are not just local Korea trades anymore. They are global AI supply chain trades tied to HBM, memory pricing, Nvidia demand, data centers, and cloud capex. The call is simple. Do not chase weak small caps just because they look cheaper. In this tape, the market is paying for proof. The proof is in AI memory. Large cap semiconductors and companies that can turn higher demand into real operating profit. Bitcoin and Ethereum still matter, but they are not leading the risk trade today. If Bitcoin is weak while Korean chip leaders keep rising, that tells us this is selective liquidity. Money is not moving into every risk asset. It is moving into the assets with the clearest earnings story. That is an important warning for crypto traders and equity traders. If Bitcoin and Ethereum cannot stabilize, do not treat the market as a full risk-on environment. Avoid late altcoin chasing. Avoid weak equity themes that need cheap liquidity to survive. But if Bitcoin and Ethereum stabilize while semiconductor leaders keep their bid, then the setup improves. That would tell us liquidity is no longer fighting the chip leadership. So Bitcoin is the thermometer. It does not have to lead every day, but if it breaks down hard, the equity trade becomes more fragile. The reason SK Hynix, Samsung Electronics, Micron, TSMC, and other semiconductor names matter is not just hype. The market is watching whether AI capex still turns into orders. AI data centers need accelerators, memory, networking, power, cooling, storage, and cloud infrastructure. HBM and advanced memories sit close to the center of that chain. That is why the market is willing to concentrate into a small number of winners. If Nvidia demand remains strong, if cloud companies keep spending, and if memory pricing stays firm, Korean chip leaders can keep outperforming. But there is a risk. AI infrastructure is demand, but it is also cost. If higher rates make funding more expensive, or if cloud companies start showing capex fatigue, the same AI story can be repriced quickly. Here is where the thesis breaks. If AI capex guidance weakens, memory pricing rolls over. Or Nvidia-linked demand starts missing expectations. Korean chip strength becomes much harder to defend. The strange part of the Korea setup is that stocks can rise even while the dollar-won exchange rate stays high. Normally, investors expect a rising Korean market to come with a stronger won. But this market is being driven more by domestic risk appetite and semiconductor earnings than by a simple foreign flow story. That means the dollar-won exchange rate near 1,530 Korean won currency per US dollar is not automatically bearish. The problem is not the level by itself. The problem is the policy response. If the dollar-won exchange rate pushes toward 1,600 Korean won currency per US dollar, the Bank of Korea may face more pressure to tighten. That would change the market setup. A higher rate response could slow domestic liquidity, hurt equity appetite, and turn a chip-led rally into a risk control market. So the Korea trade has a trigger and an invalidation line. The trigger is semiconductor leadership with stable to contain the dollar-won exchange rate. The invalidation is Korean won currency stress, moving toward policy pressure. The KOSPI is trading near record territory, around the 9,100 area. SK Hynix has become the key market cap story in Korea, even overtaking Samsung Electronics during the session by reported market value. That is not normal rotation. That is AI memory leadership becoming the market. For US viewers, the exact Korea-listed share prices are local market references in Korean won currency, not US ADR prices. The point is not to convert every one number into a dollar trade. The point is to understand where the market is giving premium valuation. SK Hynix near the 2.9 million won area is not a cheap-looking stock in price terms. It is being valued as an AI memory leader. Samsung Electronics near the mid-300,000 won area is being judged on whether its memory recovery, foundry position, and broader device business can catch up. That means the trade is not broad Korea. The trade is selective Korea AI memory. Broad Korea only works if the leaders keep confirming. High rates are the reason the rally is narrow. When interest rates stay high, weaker companies have a harder time refinancing, funding growth, and defending margins. That is why the market does not reward every growth story equally. The U.S. has its own pressure point. If inflation forces the Fed to stay tighter or even talk about higher rates, long-duration growth assets get hit first. AI infrastructure can still work, but the discount rate becomes heavier. The U.S. debt structure also matters. More short-term debt means higher policy rates can move into government interest costs faster. If longer-term treasury buyers are not strong enough, long rates can rise too. That is the macro risk. If policy rates and market rates rise together, liquidity tightens. In that environment, investors should own only the strongest earnings stories and reduce everything that depends on easy money. China is not the main trade today, but it is a major background risk. China's property market, local government financing, and currency pressure all matter for Korea. If Chinese growth slows further, it can hit regional demand, Korean exports, the won, and risk appetite. The key issue is that China is more vulnerable in a high-rate world. If it tightens, property and debt pressure become harder. If it does not tighten, currency pressure and capital outflow risk can grow. For Korean equities, that means investors cannot ignore the regional macro backdrop. A strong AI memory cycle can offset a lot of pressure, but it cannot make China risk disappear. Here is the plan. First, watch SK Hynix and Samsung Electronics relative to the KOSPI. If the leaders keep outperforming with volume, the market still has a spine. Second, watch the dollar-won exchange rate. High but contained is manageable. A move toward 1,600 Korean won currency per US dollar with policy pressure is not. Third, watch Nvidia, Micron, TSMC, and AI CapEx guidance. If the global AI memory chain confirms, Korean chip pullbacks can be viable in phases. Fourth, watch Bitcoin and Ethereum. If they stabilize, liquidity risk is less hostile. If they break down, do not call this broad risk on. Fifth, watch oil and rates. If WTI and yields rise together, inflation pressure comes back and the market's margin for error gets smaller. The buy setup is a controlled pullback in AI memory leaders while the dollar-won exchange rate stays contained and AI capex remains strong. The reduced risk setup is currency pressure, higher rates, weaker AI capex, and chip leaders losing relative strength at the same time. Here's the bottom line. This is a narrow market. The market is not buying everything, it is buying proof. The proof is AI memory, semiconductor earnings, and companies directly tied to infrastructure demand. Korea can keep working if SK Hynix and Samsung Electronics hold leadership. The $1 exchange rate stays contained, and Nvidia-linked AI capex keeps confirming. But if the won weakens toward a policy problem, if rates rise again, if Bitcoin breaks down, or if AI memory guidance weakens, defense comes first. Do not confuse a narrow leader market with a broad bull market. Follow the leaders, respect the currency, and do not chase weak assets that only work when money is cheap.